All right. Thanks for everyone for attending today. And this will be available on replay for those that weren't able to make it. But let's just get right into it here. Quick disclaimer. CamaPlan does not endorse any investments, tax, or legal advice. We encourage you all to do your due diligence before making any investments. You guys can read that and go from there, but you got to make your own decisions when making self-directed investments. All right, so a self-directed IRA. What's a self-directed IRA? There's a lot of definitions out there, but basically it lets you invest in anything that you want to invest in, right? There are a few prohibited transactions, and I'm going to get to that in just a moment, but everyone in this, realm is part of Kaylee's network, and you're looking into real estate, and, private lending and real estate is easy. These are the most from our investors, this is what we see the most of, right? Real estate, precious metals, that's physical bullion, stored in a repository, notes and mortgages. A lot of those are connected to real estate. And then private placements. And again, those are note funds, real estate funds, and other private businesses and partnerships there. I'm not going to go through these, but you can do all types of real estate, single family, commercial, raw land, etc. Again, the notes is another big field. Private lending is there. Promissory notes, that's what a lot of people do on one-offs. And then you have the private placements, which is a big field. We see a lot of this. So sometimes you have to be accredited, sometimes you don't, depending on the funds. All right, so let's talk about what you can invest in. Collectibles and life insurance is what the IRS says you can invest in, which include arts of work, gems, alcoholic beverages, but you have the exception, like we said before, with precious metals of gold, silver, platinum, and palladium. So let's talk about the type of accounts you can use, right? You can use any of these. On the left-hand side are tax-deferred accounts, such as a traditional IRA or a SEP, etc. And on the right-hand side, we have your Roth IRA or your health savings account. And I do think that people should look at the health savings account if you qualify for it, because I'm a big fan of the Roth IRA, and I'm going to get into that in the slides next to this. But the health savings account, you actually get to put money in tax deferred and take it out tax free. So if it works for you, I definitely think that that's something that you should look into. So let's look at the four types of money, is what I call this, right? If you make around 100,000, there's nothing we can do about the taxes on your W-2, salary, 1099, blah, blah, blah. You end up with around 60, right? We're just cutting 40% off of that. Your passive income, we can cut out the Social Security and Medicare because they don't charge you on that, and you're going to get about 75. Tax deferred, you're going to keep 100% of what you made, but you will pay when you take that money out. And that's why I lean towards the tax-free accounts, such as the Roth IRA. You will pay when you put the money in, but you won't pay when you take it out. So you're going to keep 100% of everything that you make. So let's see how that looks on a chart here. So I did this chart with a 10% return and a 30% tax bracket. So we start out, and I'm just gonna, it doesn't matter any tax deferred account, but let's just say Roth, traditional, and then you personally, right? $50,000 each. Your Roth IRA, and I'm just going to go to the end there, ends up with 2.2 million. Your traditional IRA ends up with 2.2 million too, but you got to take that 30% out because you're to pay the taxes or whatever the taxes are then. So you end up with 1.5, right? And then you personally end up with 748. Same investment, same house, same fund. You put it all there, you invested 50,000, and that's really the power of using these accounts. I mean, obviously the Roth is, or a tax-free account or a health savings account is really great to do in, but still, you know, a traditional SEP, simple, etc., is gonna make you a lot more money than it is to do personally. So you want to use these tools as part of building your wealth, because you're gonna make a lot more money in that realm, right? Like let's look at this compared to this, right? So you want to use these tools to your advantage and look at your plan and say, hey, this is what I'm going to do. And you can start converting stuff to a Roth. You don't have to do it all at once, but no, look at that and keep everything, you know, on your trajectory to do your plan. So this is a quote from one of our clients: invest in what you know, understand, and can control versus using hope. I've run into a lot of people that say, hey, I give it to my person at a brokerage company and I hope they make me money in stocks, bonds, mutual fund, what, like, you know, whatever it is in their portfolio. I don't think hope is a great strategy. There's some people that do very well in the stock market, and that's great. But there's others that want to diversify and put stuff into something that they know, right? They know if they buy this house and they rent it, I'm going to get X dollars for it. Economy goes a little worse, maybe I get a little less, but it's not going to zero. So it's more of your risk. There's risk in everything that we do. And, you know, that's your job to feel what you want to invest in, right? I'm not going to go into this too much, but IRAs can obviously lend money to funds and etc., but you can't lend to yourself, right? So I have a slide here with prohibited people, and I'll get into that in a minute. The main things to keep in line, because I know this is a real estate crowd, are no self-dealing and no personal issue. You can't buy a house and say, hey, I'm going to rent it out and I'm going to use it a few weeks of the year. No, it's an investment. You can't do it. You're a prohibited person, right? You can't go in and paint the walls of the house. You're a prohibited person. You can pick the contractor, you can pick the color to paint the walls, but you know, you're not the person doing it. All right, so linear ascent and descent is a prohibited person. So you couldn't buy a house and rent it to your parents or your kids, right? But you could rent it to me or aunts, uncles, brothers, etc. But also those prohibited people cannot do the work on the house, for example, right? You couldn't hire your kid to paint the walls. He's a prohibited person. I mean, basically, yeah, you want to look at it. You can't receive a current benefit from the IRA / 401k, depending on which account you're using to get ahead. So you can't say, Hey, well, I'll paint the walls and pay myself. No, again, you're a prohibited person. Why do you need us, right? Well, the IRS requires you to have a third party to hold these retirement accounts, right? And again, we're a neutral third party. We don't give investment advice. We just do the bookkeeping for the IRA. We're part of your team to do this. How easy is this? Easy to set up? Very simple. You can sign up online in about 15 minutes, right? Just right through our enroll process. And moving the funds, I always tell everybody, generally speaking, about 2 weeks, but it may come sooner, it may come a little later, depending on where it's coming from. But you can have your funds in your account and make an investment within 2 weeks. Everything is done through the IRA name, CamaPlan, FBO, Susan Smith IRA, for example. You can substitute your account number instead of your name, which some people do, if you don't want your name there. Everything with us is FDIC insured. We say there's a minimum of it's hard to do stuff in this space without having a little bit of money, but there's been some deals that people have done with less. So we say 4, but you can do less if you want. And again, like I said, we plan on 2 to 6 weeks to get the money, but we process everything within 48 hours of your account having the funds to giving us the investment paperwork. These are publications from the IRS for anyone that wants to look that up. Publication 590, kind of defines the, where's my mouse? Right here. Publication 590 defines, property and those things. If you have trouble sleeping, take a look at that. But the other one to point out is if your IRA borrows money, UBIT, and we're not going to go into that today. UBIT is unrelated business income tax, and UDFI, unrelated debt financing income. And if you do have that Form 990T, you would use, because an IRA would have to pay taxes if circumstances pertain to that. So this is my contact information. You can reach me at rfischer@camaplan.com. And obviously you have our toll-free number and my cell. So you're welcome to reach out to me. And let's see if we have any questions in the chat. Oh, all right. Yeah. So when you purchase the property, you want to look at the IRA as its own entity, right? The purchaser is going to be CamaPlan, FBO, your name, IRA, and it's going to get its own tax ID number, because obviously if, a K1, for example, went to you, you'd be paying taxes on it. So no, it's going to go to the IRA, and the IRA is going to be an exempt entity. So let's get the next one. What is the investment cap for 50 plus per year? When you say, we don't have a cap. You're the end user client. When you say 50 plus per year, can you elaborate on that? Age 50, how much can you invest tax-free per year? So Well, it depends on the type of account that you have. A traditional Roth IRA, I mean, investing, you can invest, it doesn't matter whether you invest $50,000 or $50 million, whatever's in your account. But if you're referring to contribution limits, uh, if you're under 50, it's 6,000 per year. If you're over 50, then they give you an extra thousand, so 7,000, and that refers to a Roth or a traditional IRA. But then you have SEP, simples, 401ks, defined benefit plans, and you're able to invest more. Like for the SEP, for example, right? Depending on what your business made, you can invest up to 59.5, I think, 59,500. Defined benefit plans, you can put 200. Go to our website, and under resource center, there'll be a category on the drop down that says contribution limits, and you can look at that. But that depends on, which account you're using. I encourage anybody else to ask any questions here, or we'll go ahead and I don't have any other questions, but I'll give you guys a second there, and I'll put my information back up. Go back. All right. Well, thanks for everyone joining us today. I really appreciate you taking the time out of your day to join us. And if you have any questions, please feel free to reach out to me. Have a great day, guys.